evening, everyone, and welcome to this special webinar with Odyssey Energy Solutions, Procurement with Flexible Credit, Unlocking Your Solar Pipeline in Africa, focusing in particular on CNI in Sub-Saharan Africa. We're thrilled to be joined today by Daniel Kitwa, Odyssey's Director of Business Development for Africa, who will be sharing insights from across the continent. So a little bit of housekeeping before we get into the meat of this session. Can I ask that unless you are a speaker, please keep your microphones muted and your cameras off, and you can use the chat function to network with each other. And if you have any questions for Daniel after his presentation, please put them in the Q&A section directly. Don't panic, because this is the question that comes up the most from our audience. The presentation, Daniel's presentation and the recording of the webinar will be shared with everyone after the event. So if you need a refresher on what has happened, don't worry, we will be sharing it with you. So maybe before I hand the floor to Daniel, and we dig into the main content, it's worth maybe setting the scene with some key information on the CNI segment in Sub-Saharan Africa. So Daniel, if we can go to the next slide, please. So you can see that CNI's share of new solar capacity added each year in Sub-Saharan Africa has surged from basically under 9% in 2019 to nearly 64% in 2025. And so CNI has really transformed from this small niche to the main engine of new solar capacity in the region. By total installed capacity, as you can see on the right-hand side, South Africa is by far the leader with over 8.5 gigawatts, well ahead of basically every other market on the continent. And there's a second tier that follows after that, which includes Kenya, Nigeria, Mali, Zimbabwe, Ghana, Namibia, Senegal, Sudan, and Zambia, each with the tens to low hundreds of megawatts of installed CNI capacity. Now, these markets look very different from one another. So, for example, Zambia, CNI additions are driven by mining. Large copper mines need constant and reliable power. Kenya is driven much more by manufacturing and agriculture, especially flower farms and food processing. And South Africa is driven by load shedding, with retail, mining, and manufacturing all turning to solar to keep operating. So the takeaway here, there's one continental trend, CNI is growing, but each market is shaped by its own dominant industries and grid challenges. So if we can move to the next slide, and then I will wrap up my overview of CNI. So the growth drivers, as you can see briefly on the left-hand side, solar and storage now beat diesel on cost. Falling battery costs make storage affordable, and solar is often cheaper and more reliable than the grid. However, the key challenges here, customers increasingly want PPAs, so long-term power purchase agreements or leases, rather than paying for CNI systems up front, which shifts the financing risk onto the developers. Currency and FX risk add cost and uncertainty to project financing, and regulation varies hugely by country. So captive generation and net metering rules differ, and approvals can be slow. There can also be resistance from distribution utilities. So the deeper point is basically this. The CNI market has largely grown in spite of the rules, and not because of them. So businesses are switching to solar and storage to solve a real urgent power problem, even when the regulation is unclear or slow. And policy is mostly lagged behind the commercial reality. And as frameworks catch up, particularly on captive generation and approvals, there is room for the market to grow even faster. Now, you've all heard enough from me. I'm not the star of this show. So to take us through the main focus of this webinar, how flexible credit is transforming solar procurement in Africa, I would like to give the floor to Daniel Kitwa, Director of Business Development for Africa at Odyssey Energy Solutions. Daniel, I invite you to unmute yourself and turn on your camera, and I'm very pleased to hand you the floor. Please go ahead.
Yeah, thanks, Benjamin and team, FCA team. Always a pleasure to collaborate and engage on opportunities for developers across Africa and beyond. As you've heard, good morning, everyone. My name is Daniel Kitwa. I'm based in Nairobi, Kenya. I lead our partnerships, market growth, and business development for our supply chain credit and procurement credit function for Odyssey. I'll tell you a little bit about what we do and how we can collaborate together. But let me give you a warm welcome and thank you for joining wherever you are. So feel free during the course of the conversation, during the course of the webinar to engage on our chat and Q&A functions on the platform. Feel free to ask questions, to ask and engage on any clarification you need throughout this discussion, and we'll have a little bit of time towards the end to address all those questions. So a little bit about Odyssey and who we are. We are a global procurement platform, and we are the way we describe ourselves and view ourselves is we are the center of the distributed energy ecosystem with dedicated teams globally to support all the ecosystem players in the energy sector. So this could be top-tier banks, fund managers, DFIs, IPP developers, EPCs, and even OEMs, playing their different roles in the ecosystem. So we integrate and aggregate demand and supply and coordinate through our platform to support unlocking of capital and also increasing velocity of projects being built. To date, to give you a sense of what we've done throughout our roles across Africa, Asia, and Latin America, we've aggregated more than 6,000 installers and EPCs on our platform, onboarded them and understood their needs. We've mobilized more than $3 billion of capital. Obviously, some of that capital is the ones we own and coordinate and underwrite, but also we've aggregated partners across the globe, who also bring their own capital. We have also partnered with global tier one OEMs across different equipment aspects from PV, BESS, mounting structures, inverters, LV and MV lines, and T&D as well. With this, we've been able to support the deployment of more than 4 million systems. And again, truly, as you can see from that diagram, playing a role in integrating the various players in the market. So I believe if you're a solar company or an EPC or an IPP, you're in the right room, as well as if you're an OEM or a financier. So as mentioned, we basically aggregate and support all those players to unlock value for the projects they are working on. That visual just gives you a snapshot of our footprint. So in Africa specifically, we've supported the full scope of technologies from small appliances, productive use and solar home systems, to grid type systems like mini grids and public infrastructure and solar telco towers, as well as CNI projects, which I believe some of you are already involved in different aspects. And then in other markets, similarly, we also tap into opportunities that are ongoing there, and we support at different levels of the value chain. So in the next few minutes, I'll just walk you through our specific product around supply chain and procurement credit, but also zooming into what that means for projects and pipeline in Africa. I think borrowing from what Benjamin had highlighted earlier, the CNI space is growing in spite of the challenges that were captured. But I think we can all collaborate and hopefully make the experience much more better for developers building projects across the continent. So just to give you a sense about what we do, we understand for EPCs, more or less, they need a number of aspects, and we broadly categorize them into two buckets from the context of supply chain function. Um, on the left side, you see a lot of EPCs would require some sort of upfront cash to move projects along the road, along the line, and prevent a situation where they stagnate. Um, then you find a lot of them also they need to stack up this supply chain credit or whatever cash they need to build up to underline to the various cash that is coming down the road. Now, on the right, you'd find OEMs require clarity on the procurement scope. They provide quotations end to end, and also provide an EPC with the logistics. Now, what we did from our end, we bucketed these two aspects on the demand side from the developer and also on the supply side from the OEM to provide supply chain credit or equipment financing, which allows a developer to execute their build without necessarily tying up their own equity or deposits from customers that may or may not be available. Now, it also allows, with that, we're able to support a developer to execute projects almost immediately without any other codependencies that sometimes are reliant on the need for upfront cash. And then for our end, we align the payment of our equipment financing or support or procurement finance to the cash flow proceeds of the project. So this could be payment from your EPC bill from your PPA provider. It could be your off-takers, or it could be even in contexts where you're executing a government-backed or a DFI-backed tender, payments out of those contractual proceeds. The best thing also with this is this stacks on top of your existing financing, meaning it exists outside your balance sheet and does not interfere with your existing borrowings. Now, on the right side, that value that we aggregate from yourselves as developers, we're able to leverage top-tier OEMs that we have partnered with and unlocked what we call most favored nation partnerships, which essentially means as a developer, if you procure through our platform, you are guaranteed of best terms and pricing. In terms of the landed cost that you would have incurred on your own would be with our platform would be much lower than in the event where you had procured on your own. And now with that also, we are able to unlock bulk pricing benefits even for small orders of projects. And later on, I'll explain with some examples of case studies in terms of how we are able to provide that. And then that obviously comes with competitive quotations across your core component scope, as well as guidance and optimization of end-to-end logistics, either from China, from India, or wherever else you want to procure through our platform. Now, with this, what we've seen, we are able to inject certainty in terms of pipeline. We notice a lot of developers would say, I have X, $1 million or X megawatt of projects, but without the right supply chain solution or the right procurement approach, most of that pipeline ends up stalled or delayed at best. So with this, we are able to more or less guarantee yourselves and your consumers, your partners, your clients, certainty in terms of the build you're trying to unlock. Now, to give you a sense, we have, as mentioned before, we have all the leading tier one OEMs. Of course, the logos shown there are not exhaustive, but to give you a sense that tells you we are able to support you as per your preferred partner, and also as per your preferred terms. If, for example, pricing is a key consideration, we're able to consider that during procurement. If warranties, delivery timelines, or other considerations are important, we are able to consider that. And then this also, we've been able to support developers because of highly specialized staff that we have, from ex-bankers, ex-EPC developers, supply chain experts, legal and other roles within the energy ecosystem. We're able to provide operational excellence even to developers who often may have been constrained in terms of talent or skills. And in that case, we're able to almost become an extension of your procurement team or your procurement function, but at the same level, inject investment grade skill sets into your projects. Now, moving on, I think this visual is quite important because, as mentioned, we understand a lot of developers, um, when they come to us, they're also going through a number of, either fundraising processes or, building up their capital stack. And what we have seen over the time, we get asked lots of questions around what is the best time to come. I think we work, hand in hand to support you and almost coming at the level where it is most optimal for the projects you're underwriting or the projects you're executing. So in the context of, in some developers, we've been able to partner with them at the holdco level, as a counterparty, or at the SPV level, or even work with their PPA partners, for instance. So whichever level of procurement credit is, almost a necessity in whatever level you're executing. So that sort of gives you comfort in terms of, at what point do you engage and work with us. We are quite proactive in developing what we call an optimal solution for the needs that you have at that particular point in time. Now, what you're seeing there is some of the key high-level summary. From a supply chain credit, we are able to support an equipment scope of up to $5 million, unlock, a window of up to 12 months in terms of flexible payment terms. And that for you to access that limit, you only required to put in a 15% deposit, which comes in as your equity contribution into the procurement scope. Now, in terms of expectations, there'll be a margin would unlock, obviously, after optimizing your procurement and getting you best pricing and terms, and injecting the value that we need in terms of equipment savings. Typically, more often than not, we would find a way of securitizing your cash flows, if it's through a tendering program, if it's through your corporate off-takers or corporate buyers, or a PPA drawdown, or an IPPA engagement you have as a developer. Would find ways of securitizing that. Even in some cases, sidestepping balance sheet risks and partnering with, say, for example, with lenders or other partners that can de-risk the projects. Now, to give you a sense in terms of the process, the initial screening can take between 7 to 10 days just to start the relationship, and then we proceed from there. Now, what that means from a high level view, is one, you're able to quote unquote, for the lack of a better word, unlock working capital without going to a bank. And then you're able to unlock efficiency in terms of time savings. You're able to look at flexible repayment within our structure, within that 6 to 12 month horizon. And then the last one is you're able to unlock, additionality in your capital stack. Now, we have, as mentioned before, we have an initial screening process. Usually it takes about 7 to 10 working days, where we pre-qualify a developer. So as you saw in previously, I had mentioned there are a number of developers who've been onboarded. So most of them would have gone through this process. Here, in terms of the key information we look at is, a view on your corporate financials, shareholding structure and governance, understanding your capitalization history, your cap table, your debt schedule, either at your SPV or also including your holding company level. And then, most importantly, also taking a view on your technical track record, either as an EPC or as an IPP or whatever, facet or role you're playing in the ecosystem. So here we look at, installed capacity you've unlocked, either sizes of projects, and your typical off-takers, and also your future pipeline that you're trying to unlock. And then obviously, because we are in a space where ESG is quite important, both for the clients we serve and the capital we represent. We also try to understand your ENS compliance, process both at your company and also at project level. Now, once you go through this pre-qualification process, we are able to assign a credit limit or a credit envelope, and we're able to shortlist you, which means you are able to come back to us with a portfolio of projects or a project pipeline that is within that set limit, and we are able to diligence that. Now, when we get to that level, we call it phase two or stage two. There are a number of documentation and information we would or clarity we would like to see. One, it could be a signed offtake agreement if it's a tender, or if it's a CNI build, for example, whatever offtake agreement you have, we'd like to see that, because that forms the economic basis for assessing the cash flow projections, and also the flow of sequencing of your build. And then in cases where you have concluded that, of course, that means you'd have already scoped out your bill of quantities. In some cases, you could have extensively even gotten quotations from OEMs. In that case, what that happens is, while we use that as your baseline, we would support you once approved to optimize your quotations by leveraging our OEM network to get better pricing and terms for your pipeline. Now, the third aspect is to understand what is the balance of funding required in addition to our equipment financing. Obviously, our support is only tied to the equipment scope of the project. We don't cover, for example, soft costs or OPEX, or land acquisition or regulatory compliance, or anything that more or less aligned to corporate overheads. So we like to understand whether those aspects that are codependent to your execution have already been secured or financed, or even or are in this or are in the process of being secured. And then the last is we would as part of the structuring, we would implement a repayment mechanism. This could be assignment of proceeds to a bank account controlled by us, or an escrow or a shared account model, or even sidestepping your balance sheet, and, for example, tapping into other risk mitigation instruments such as LCs, SBLCs, or advanced payment guarantees. So all that is basically, we find ways to unlock value and ring fence your projects and de-risk them throughout the journey of our engagement to support you build. Yeah, so with this sort of process roughly can take you a week or two. So again, quite efficient, especially for projects that need to convert within a short time. Again, this now in terms of post approval, there are a number of aspects that will happen. We will implement CPs such as securing the deposit, the minimum 15% I mentioned, setting up the escrow, and beginning procurement from the suppliers that we've aligned with together with yourself. And then from there, you're able to execute the build and start collecting from your customer or your off-taker. Now, I think it's probably easier to explain the ideas I mentioned before with a few case studies, just to give you a sense on how that would work. These are real case studies from the projects we've supported. So the first one I'll just go quickly is a CNI hybrid CNI project. Here we were looking at a scenario where the client was backed by a European developer who had raised 100+ million from DFIs and a track record of projects across Africa. There was a mismatch between the drawdown from the IPP and the CNI developer. So it meant that we needed to come in quite early to support the developer in securing goods to be able to execute their build. The project cost was roughly $2.4 million, and the key main items were tier 1 solar PV modules, lithium ion battery storage, and inverters. As you can see there, the project was in Africa, and the off-taker there, the EPC was supposed to build 20, implement this project across 25 branches for a large African bank. So in this case, our counterparty was a local EPC, and the payment was coming from the contractual engagement they had with the off-taker and the developer. We were looking at roughly 4-month procurement timeline and a 6-month construction timeline. So end to end, about 10 months for the procurement, building, and commissioning. Of course, these were we also, when we were structuring, we wanted to understand the challenges. The first challenge was the PPA had been signed between the off-taker and the developer, and hence time was of the essence. The EPC was required to front load about 45% of equipment costs. The project economics were also quite, dependent on delivery timelines and project execution. Um, but the disbursement was, coming at the tail end. So what did we do? We sourced competitively, getting quotations from leading OEMs and leveraging efficiencies throughout the quotation process. We were able to provide a 4-month credit bridge that covered manufacturing, shipping, and clearing of goods in country. And again, to mention here, we usually work with the Incoterms that are preferred by the developer. So if we are working on FOB, we're able to do that. If it's on CIF, CFR, or DDP basis, we're able to work with those terms and align with whatever makes sense for your engineering team. And then with just a 15% deposit, we were able to unlock the balance of equipment value. And that means the developer or the EPC was not, preserved from making 100% payment upfront to their OEMs. Now, in terms of benefits, there were about 12% cost savings. And as you know, from EPCs and those who are in the room, that's quite significant, especially for mid-sized and even small projects where economies of scale have not yet kicked in. But because of aggregating through our platform, the developer was able to optimize further. And then because of the delayed fund disbursement or the delayed drawdown from the arrangement the EPC had with the IPP, we also unlocked an additional 144,000 cost savings and also injected efficiency in the transaction. So this is just an example of a hybrid CNI scenario. To give you a sense, we also have done another case study where this was a developer, a mini-grid developer with a much larger project scope, almost $3.9 million for 15 sites. More or less, the BOQ items were the core generation and some distribution infra. We were able to securitize a tender they had from the World Bank. So this is the only way we were able to do this was to understand the constraints they had. One of the constraints was the tender was paying up to 80% of repayment was coming based on connections and almost towards the tail end of the contract. So we were able to almost cover that gap, liquidity gap throughout the execution process and to the point they were able to invoice. Again, the other benefit with this is while the individual projects were small, by aggregating one procurement scope, we were able to unlock more than 2 megawatts of solar capacity and unlock more than 8,000 connections. So allow me to pause there first if there are any questions. But to give you a sense, we're able to support you in accelerating your pipeline in a very short duration of time. Right now, to give you a sense, we are actively closing a number of transactions across various African countries. We've already done a lot of work in Nigeria, and we continue to do that. We're already doing projects in Kenya, Uganda, Ghana, DRC, Tanzania, Malawi, Zambia, Madagascar, Zimbabwe, and so forth. So we are quite, bullish about the continent. Whether your projects are involve industrial offtake or residential offtake, we can find ways to support you. Yeah, in the interest of time, I know we have a couple of minutes. I'd be happy to um, pass back to you, Benjamin, and if there are any questions, happy to address.
Thank you so much, Daniel, and thank you for that overview of that of of your product. I think it's particularly important that there's something designed specifically with CNI in mind, seeing as it is now the lion's share of additions, as we were talking about earlier, across Africa. So to kick us off, I've got a question in the Q&A from Barry from Incorsoft. Um, he says, we've been awarded a municipal training and implementation program in South Africa with a structured solar rollout across high density areas. Given your platform's focus on enabling EPCs to access working capital and procure equipment faster, how can you support us in structuring procurement with flexible credit to unlock and scale this deployment pipeline? I suppose that is speaking directly about high density areas. So, what information do you have for Barry?
Yeah, that's a very good point. I think for lots of the, I guess, municipal or what I call sub-government agency tenders, as long as there's clarity on the rollout plan in terms of, um, you know, either by quarter or by region or by scope, I think it's quite easy to, to support you on that. Of course, I would be happy to, lean in and understand the nitty-gritties of the project, the nature of the offtake, the type of equipment, the timelines, and the rollout plans, and also your experience in supporting some of these projects. But I think for sure there is a clear need to, and we've seen that not only in South Africa, but also in other countries where at the subnational level, they're also implementing projects. I think as of recent as couple of weeks, we've been seeing even solar street lighting projects in Uganda, in Kenya, and other regions implemented by municipal bodies and subnational agencies.
Thanks so much for that, Daniel. And Barry, if you heard that and want to reach out to Daniel, you can see that Lucille, also from Odyssey, has dropped in the chat an email address for people to contact Odyssey with your projects. And there's a link to a contact form as well. Please do make use of that. Um, and I have another question. Okay, great. Barry's found it. I've got a question from an anonymous attendee. That is, what is the minimum procurement ticket that you can approve?
Yeah, that's a good question. From a minimum, we've gone historically as low as $100,000. Typically, we also probably for small tickets, we want to see potential for repeatability, because obviously it takes a lot of resource to structure some of these transactions. Yeah, so I think understanding your growth plans are also important. And also to give you a sense, in some markets, we've been starting work to aggregate small orders. I think we are doing that already in Nigeria, where we are starting to aggregate smaller distributors just to make the economics work for all parties. So yeah, happy to understand your current needs and evolving needs as you build your pipeline.
Thanks for that, Daniel. And to whoever the anonymous attendee was, I encourage you to get in contact with the Odyssey team so that they can better understand your needs. Um, a call to anyone else who has a burning question. I have a few, but we're not here to listen to me. So if you have questions for Daniel, please do drop them in the Q&A. So Daniel, I suppose a question that I had on my side is that when when it comes to you talked about kind of efficiencies in the procurement process and so on and so forth, and kind of uh, my question is how much time well, do you have a rough idea of how much time working with Odyssey saves when it comes to procurement, and how soon you can get to construction? I suppose it's different per project, but do you have a rough idea?
Yeah, that's a good question. Obviously, the more advanced the project development cycle is, the better for all parties. So, for projects that we consider late stage development or ready to build, um, usually the bottlenecks in that case is mostly the equipment financing piece. So a lot of the developers would have done their background in terms of technical designs, regulatory approvals, securing their offtake agreements, putting together their delivery schedule and their bill of quantities. So in that case, we are, developers have done, most of the work, and we're just kind of tipping the scales and, improving the odds in their favor. So in that case, we've, end to end from, assuming stage one and two, we've done, upwards of 2 weeks. And then it roughly takes us a week or so to conclude um, processes with OEMs, either revised quotations to re-optimize the budgets that the developer was working with because of our most favored nation partnerships. Um, and then really, depending on the nature of the CPs, some CPs are as short as a week, some as long as a month. So, we work with the developer proactively to realize those CPs. So I would say, we've gone as quickly as 2, 3 weeks to a month to start procurement. And then also the other factor to lean on is depending on how the developer is organized. I know some developers are part of a large shareholding conglomerate, so
Mm.
decision making can take time. We understand that, but as long as there's quite clarity in terms of their own from their own governance, then we are able to adapt and reprioritize according to their needs.
Okay. No, no, that's useful to that. I think that's useful to understand. So it's really a kind of customizable solution. We've got a lot more a lot more questions that have appeared in the Q&A now. So I want to give you one first from Adamola Luro, who says we are developing a 5 megawatt peak mini grid with 10 megawatt hours of storage, currently at the construction stage, and we expect construction to be completed by August. Would it be possible to get onboarded at this stage? We are supported by the AFDB and carbon credit funding through an international institution.
Yeah, so yeah, if it's specific to it appears this project is already ongoing.
Mm,
So maybe the funding has been secured. But if, for example, there is potential equipment that is yet to be procured, and there's probably need to support you, increase the velocity of your projects, then that's fine. And also, it could also be that even if you've secured financing and you do not need credit, but you still want to leverage the platform to optimize your pricing terms, you can procure on a cash-backed basis through our platform and optimize your quotations from your OEMs. So that's one option that is still on the table for scenarios where um, credit might already have been secured, but you still need more efficiency in terms of your equipment value.
So yeah, Ademola, take note of that. And yeah, if there are any more equipment needs, you know how to contact Odyssey. It's all in the chat. Next, I have a question from Bamei Mwandam. What kind of profile should someone, uh, a developer or a company, have for Odyssey to be able to come through for them?
Yeah. So depending on the market, we've supported as companies as as low as 2 to 3 years in operation, um, to 30-year-old companies. So the most important thing we want to see is technical track record of both the teams and the company. It would be sometimes quite hard to support someone building 5 megawatts as a first build and they have no technical track record. There are other ways to support. For example, we've seen scenarios where developers have approached us, either working through a consortium where they have strengthened their teams and their competence through those frameworks, and they're able to execute and build confidence with their counterparties. So that's one option. There are other options where we have gotten and supported developers to procure but sidestep the balance sheet risk or the limitations of a smaller balance sheet by either getting other forms of guarantees or bank instruments to be able to get comfort. So I would not say no. It just depends on the context that you're having, and we'd be happy to take a look.
Thank you very much. Bame, I hope that answers your question. Then we have another question from George, which is, do you support projects across different companies? But sorry, do you support projects across different countries, sir, by one EPC?
Yeah, yes. Yeah, the short answer is yes. The only thing that might vary is we might process the stage one screening as, from one group view or from one view of the whole company. But what happens is typically at the second stage, we would assess transaction by transaction. If you follow in one tree and another in tree, we'll try to view that separately. However, there could be ways to still, if they're all going at the same time, the procurements could be done more or less aggregated to even improve the economics as a whole. But the question is how the individual projects are set up. Are they set up as separate SPVs or subsidiaries? And how will that look like? So we'll probably want to understand the codependencies between the different markets vis-a-vis the parent EPC company. And if once we're able to take a view on that, we can see how to either aggregate together or view them separately, which in most cases tends to happen because the projects mature at different horizons.
So to ensure, yes, but it depends. Yeah. Okay.
Yeah.
Thank you. I can see a lot of people in the chat that are asking for contact details, asking how they can get in contact with you, and so on and so forth. Everyone, please look in the chat. Lucille has just posted the contact address for Odyssey Energy Solutions, and she has also posted a contact form. So if you're looking to get in contact with if you're looking to get in contact with Odyssey for a specific project, please look at those details that Lucille has shared. So solutions at odysseyenergysolutions.com and odysseyenergysolutions.com for the contact form. Um, so I've got a question here from Bongani, um, who is writing more from the SHS side of things. So I'm going to ask this and see kind of what you can offer. But okay, our service providers within our panel get allocated between between 1,000 to 1,600 SHS per year to install in different project areas within a given country. Most projects start up very slowly because of finance challenges accompanied by procurement delays as some of the equipment comes from abroad. Can our service providers, sorry, be able to access your funds, and what is the maximum amount that can be provided for them? Our budget is just over 250 million rand annually, and each appointed service provider is allocated around 15 million rand annually. And this is from Bongani from DEE, South Africa.
Okay. Yeah, so it appears as more or less like a master distributor model in that sort of description, if I got it correctly. Um, I think usually the first thing is to understand is the relationship between the main supplier and the smaller suppliers. What are the payment terms, the type of equipment, and the timelines. Obviously, with the solar home systems, there are a number of unique challenges that are quite different from, say, a traditional CNI build. So, for example, one of the challenges is a lot of the solar home system distributors um, more or less rely on the receivables from the end customers or the residential customers to build up their working capital chest for the next procurement cycle. So that creates a much longer time lag. Obviously, we've done a few of SHS projects, and we've looked at ways to reduce or shrink that sort of elongated working capital cycle. It sometimes may work for some business models, and at times we may not. So it just depends on that. And then also, we've also seen scenarios where some distributors also partner with third-party MFIs or financial institutions, and we're able to support those contracts as well. So I would say I'd be happy to first understand how that setup is organized, um, where, and how is the drawdown cycle between the master distributor and the smaller distributors.
No, thanks for that. And Bongani, I hope that's provided some clarity. Um, once again, the recurring question that is coming up in the chat is, can we get the presentation and the recording? To which the answer is absolutely yes. They will be shared with everyone after this. So if you missed anything this time round, you will have more time to read and inwardly digest it. Then there's a lot more questions about what's the best way to contact Odyssey. So I can see solutions at odysseyenergysolutions.com as the email address. But Daniel, is there any other way to get in for people to get in contact with you in particular, or should they write to that solutions at odysseyenergysolutions.com email? Is that the best way?
Yes, I'm happy also I think Lucille will usually contact once a client engages. She's very responsive. She's on the call, and Usually we would assess the opportunity together, and the rest of my team, and within a couple of days get back to you on next steps. So yes, for sure.
Thanks, Daniel. And I want to. Okay, we've got a question in the chat now, which is quite interesting. Are there any recommendations to help companies to successfully close a good financial process with each type of banking institution?
Yeah, yeah, we also get questions on around recommendations on financing partners. Um, I think um, I think for most financials, track record is very important. Being able to demonstrate quick wins in your earlier projects are, I think the most efficient way to unlock that. I think the other the other way is also try to organize your setup pretty early on. We've had scenarios where we work with a developer, and in the middle of their scaling is when they are sort of reorganizing their corporate structure and hiving off different business units from into different SPVs, and those can take quite a lot of bandwidth. So I think that from a corporate and organizational setup, if you're able to, plan your growth from the onset, then that would be the best. Yeah.
No, thanks for that. I know I've got a reminder of someone who posted a question a while ago that I did not get to. So sorry about that. The question is, in essence, can Odyssey help with technical assistance on a pilot project? This person has an agreement for two interconnected mini grid sites, and they want to know if Odyssey can help with technical assistance.
Uh, no, we sometimes the projects we support, particularly like for example the interconnected mini grids, with different RBFs and other tenders, may come with technical assistance budgets. So I think when you're submitting your applications, if there are those available opportunities, I would probably point you towards that to take advantage of those. The Some of the ways we could support, our platform is publicly available. We have tools like Homa, you can use to design your projects, and play up with your scenarios in terms of design. And also, there's a lot of information publicly available through all the webinars we've done, and around supply chain, around supply chain credit, around opportunities, and even around the programs we support on the platform side. Because this is just one part of our business. We have the asset management side of our business where we support project management workflows for all these tenders. So there are also other different pieces of information once you register on the platform.
Thanks for that, Daniel. And one final question for you. There are several more in the question and answer session, but I will encourage them to get in contact with you and the Odyssey team afterwards. Um, so it's quite an interesting one. It's about ownership. It's about ownership of equipment warranties. As you were involved in the procurement,
Yeah.
who owns the equipment warranty and who is responsible for claiming it or maintaining the documentation or everything like that?
Yeah, that's an important point. In most cases where the where the payment of equipment comes in after goods have been supplied, what happens is we retain legal title of goods, because that in most cases that also can be a source of collateral. Um, but in terms of practical, for all intents and purposes, you'd find the developer would have operational title, so they'll be able to access goods and build and be able to invoice or raise a claim for their offtake engagement. Where there are issues to do with warranty claims, we during the process of the time of contract, the contract when the contract is live between ourselves and the developer, we would support you to fulfill all those requirements, including engaging with OEMs. So we are very proactive. It's not like we supply and goods and disappear. We are very involved in ensuring success of your builds, up to commissioning, so that everything works out quite well. We've had scenarios where, for whatever reason, a developer would want to replace the equipment, or a specific batch requires to be maybe changed or, relooked at, and we've been supported effectively that to be delivered by the OEMs or the distributors.
Thanks, Daniel. And I think it's it's an important point to clarify. But yeah, it seems thank you for providing the explanation. I I'm very sorry to everyone who is still posting questions. Daniel, you've clearly done a very good job of creating an engaging presentation. I am going to share again the contact details that Lucille has shared in the chat. So for those of you who have more burning questions for Daniel or Lucille or the rest of the Odyssey Energy Solutions team, you can contact them at solutions@odysseyenergysolutions.com, or you can visit their website, odysseyenergysolutions.com, and there's a contact form there. I'm posting the links to both now. Um, but yes, unfortunately, we've come to the end of our time. But Daniel, I want to thank you so much for your very engaging presentation. And I think the fact that people are still asking questions shows that there is clearly an appetite and a lot of intrigue around what you're presenting. So I'd like to thank you and the Odyssey Energy Solutions team for making yourselves available today. And I would like to thank all of the people who have joined us on YouTube and LinkedIn and on Zoom. Please do bear in mind those contact addresses that I've posted, and do send your questions to Odyssey Energy Solutions there. Thank you, everyone, and we will share the presentation and the recording with you very, very shortly after this webinar. But for now, have a great rest of the week, and thank you very much. Goodbye, everyone.